Today we're taking a deep dive into Centrifuge. It's a real-world asset project that is well backed, and the total market that's available to them is absolutely massive. But the question is, are they going to be able to get there? We'll take a look, throw it in the model, and see what it spits out. And if this is your first time, you may be asking, why throw a crypto in a model? It's a crypto. Well, if you look back at the last bull cycle, a lot of the successful projects had good business cases. And I'd also ask, would you rather just make your decisions based on hopium, or use some data, look at the good, look at the bad, and decide if it's a good project for you? So let's jump in and take a look, see what it spits out. So the project is a marketplace for real world assets, and they're focusing on customers being large, medium sized financial firms. Their main target right now are other DeFi and crypto companies, since they're more comfortable working with these interfaces and technology. And basically, what allows these customers to do, these large businesses to do, is allows them to earn yield through these real world assets. So they have about 12 right now, and a little over. And their securitized debt is a good portion of it. And if you don't know what that is, it's just like a bundle of loans. So you can think of, a bunch of maybe car loans or real estate loans, and they're packaged together by a company. That company then provides that as like a single product, right, to Centrifuge. Centrifuge lists it, and then the customers, the companies who want to earn that yield, they go on Centrifuge's platform, they buy a portion of it, and then they earn a percentage yield on whatever that whatever amount of dollars that they buy, right? So um, it's a great way for these companies to earn yield on something that's more tangible than maybe like a crypto farm or something like that. And it's different than, it's more traditional, different than like a liquidity pool. So allows them to kind of diversify. But they also tokenize treasuries, real estate, and invoicing. And when I say tokenize, I forgot to mention they really just create like an NFT, and then that's how it's tokenized. So the loans are tokenized into an NFT, and then there's like a record of it on the blockchain, and then you can purchase a portion of that. So looking at the tokenomics, though, it's not great. They've got it started with 400 million tokens. About half of those went to early backers and investors. So there's some dilution risk towards, as the price starts to increase, you got to ask yourself, are they going to be selling to make back some of their money? But they do have lockups on team members. Wasn't able to find much on what the lockups were for investors. But if you're interested in this project, I'd recommend checking out their discords and community platforms, and just seeing if you can find some more information, because their lockup for the team members is about a year and a half out, unknown, like I said, for the financial backers. And the inflation of 3% a year is pretty significant. It looks like they've added 155 million tokens since the launch 2 years ago, which, let's just do the math here, because that's seems like a lot. Seems like more than 3%. That's like 39%. So I don't know if the information's just my information's a little skewed on the initial offering, but the inflation does seem to be above that 3%. Let's see. The team though, is that they are highly experienced. They tokenized the first RWA as far back as, what was it, 2017 for MakerDAO is what they said. And then they also have been audited by 5 financial firms, including Trail Bits, which is good. So I mentioned they have huge market potential. Let's look real quick into what they kind of are looking at revenue-wise now. So they're earning fees of 0.4% on all the assets that they have locked in for these loans, right? The ones that you can purchase, and they're reinvesting that growth in the platform, which is good. At the current TVL of 285 million, or yeah, $1 million worth of loans, They're earning about $1 million a year. Their stated goal is to get to 1 billion by the end of this year, and that would get them to $4 million. But what kind of valuation could they get to? And I want to go over this total available market too, because it's huge. Um, they're let's just look at the goal case. So if they hit their target end of the year, they'll be making 4 million a year. At a conservative multiplier, that's 120 million-dollar valuation. Obviously, the market's pricing way more than that. They're at about, just shy of 400 million right now in market cap. So obviously some bull market multipliers being applied. If we look last cycle, uh, 30 to 300 times multipliers were common. And if we chose towards the higher end for this project, that would be 800 million worth of market cap. So still edging up, beginning of the bull market, edging pretty high on that value, getting pretty close to that valuation already. So let's look at why the market might be more excited for this project. And for that, we'd have to look at the total available market, which just means like how many dollars of these products are available in the marketplace. And I just looked at securitized debt, which is just these debt pools that are resold. It's a pretty common product in the financial industry. And if you look at what that was in 2023, it was $12 trillion worth of these loans. That's a huge marketplace. But part of the problem I see projects like this having is they're not going to be able to just take all of that market share away, because a lot of the family offices and a lot of the companies that invest in these types of products are pretty risk adverse, and they're not going to, they'll probably be shy about investing in these in a new platform, let alone a smaller platform that doesn't have a ton of assets that they're managing. So let's just say 1% of all of these managed dollars makes their way into DeFi, real world asset. Um, that would be $120 billion, which is pretty significant amount of money to play with. And then let's just say that Centrifuge or GFC takes about 30% of that market share, which I think is totally viable. That would give them about $36 billion of total log value there. And with their fee of 0.4%, they would be earning a revenue of $144 million a year, which is pretty nice. And if they get a multiplier of 100x on their valuation, uh, considering, just assuming it's a bull case, that brings their market cap to $14 billion, $14.4 billion. And I think that's pretty fair. I think that's a pretty uh, generous valuation for them. And so the question really comes down to: are they going to be able to, how are they going to be able to grow? Are they going to be able to add to their total loans? Of course, they can add different types of real world assets. Doesn't have to just be securitized loans. So maybe they add some treasuries or some stuff that some oil or other commodities that could help them grow that as well, without having to kind of get some of these loan guys interested in moving over to DeFi. So let's put that down real quick. Yep, 14.4. And then the other question is like, how far out does the market look? Because obviously it's huge. It is a huge dollar amount. And they can definitely learn a ton or earn a ton in fees in the long run. But does the market want to look out three years ahead, or are they gonna, kind of be scared off because there's the growth potential just doesn't look that huge in the next couple months or the next 12 to 24 months, right? So I think that's the question you have to ask when you're looking to invest in this project. And you also need to understand there's a risk with securitized debts, loans, and debt products in general. These loans can default. They've had a loan default. They should be fairly protected, theoretically. If you know, the holders buy the loan, then the holders lose the principal amount, and the platform should be fairly protected by that, as long as it's backed up by the people trying to get the yield, right? Those money managers. So all good questions to ask before you ape into this thing. And there you have your multipliers, 3.5 on the bottom case. I think that's what their current generous current revenue projections at end of year. And then peak bull case, you know, it's pretty surprisingly low for this type of potential. I just think it's going to take longer to develop. Might be a play next cycle. So high speculative potential, staying power. I think that's pretty good staying potential. I think the tokenomics hurt them a little bit there, and then the reputation is definitely solid. If you look at their community stuff, they're very professional. So I like them in that category. And there are a couple missing inputs that could have dinged them there on the reputation side. So if you got this far, you definitely got some value from this video. So I would appreciate a subscribe. And if you have anything you want me to take a look at, I would love to do that. Just ask that you would take time to put in your comment what it is you would like me to look at, what problem they solve. If you can make a good case, they solve a good problem in crypto. It's more likely I'll spend time because these take hours to do research on. And then also throw in their market cap to give me kind of an idea of where they are in the space. So I appreciate your watching and for your suggestions in the comments. Thank you.